I'm Matt Bishar with NAREITREIT.com. I'm here at the New York Hilton for REIT Week 2017, NAREIT's Investor Forum. Joining me today is Bill Meaney, the President and CEO of Iron Mountain. Bill, thanks so much for joining us.
No, thanks for having me.
Now, it's been a year since the recall deal. What do you think has been the big story with Iron Mountain since that deal took place?
Well, I think the first thing is putting these two companies together. As Recall was the number 2, we were the number 1, but we were the only 2 global players. So now we are by far the leading and only global platform in the industry. And with that, 2 things have really happened. One is that the synergies that resulted from that, which our shareholders benefit directly from that. And there was between the Recall acquisition and the restructuring our overheads, that leads to about $230 million worth of benefits that will flow through, and a lot of that has already flowed through to our shareholders. So that allowed us to increase the dividend already at the end of last year in Q4 of 2016 by 13%. And we've already announced that we'll increase the dividend again in 2018 by another 7%. So the financial aspects of putting these 2 players together and having the only global platform has had a major impact. The other part of the impact is the strategic benefit for our customers, quite frankly, because the fact that we've been able to build even more scale is allowed us to build the ability to help our customers manage through the morass of requirements to protect them from litigation and compliance, which is getting more and more complex in the world. And in fact, we've launched something this week, which was a platform that allows people to better score their ability to actually respond to a litigation or regulatory request.
And obviously the main component here at REIT Week is putting REIT management face-to-face with their investors. As you speak to investors, what are some of the most common questions that you're getting these days?
Whether you speak to REIT investors or C-Corp investors, I think people are interested in every company's growth story and their orientation towards growth. And so that's by far the major theme that we hear. And the way we talk about that really is we think about growth in Iron Mountain really on 3 different levels. One is that we've been very consistent that the emerging market is a big part of our opportunity. 3 years ago, only 10% of our sales were in the emerging markets. As we sit here today, it's 17, approaching 18% of our sales is in those emerging markets. And these are markets that are growing high single digits of organic growth, i.e. before acquisitions. So that's a big part of our orientation in terms of providing continued growth. The other part is some of the new business areas, which I think you and I have talked about previously, such as data center and art. And the data center business last year grew at 25% organically, which is actually outstripping the growth in the co-location spaces where we're primarily focused, because the co-location space itself grows, say, 12 to 15%. So again, high internal growth rates in the segment that we've chosen, and we're happily outperforming that a bit. We've also entered the art storage market recently, which is a high single-digit organic growth market, even though Monet is not painting paintings anymore, is just the way that art is being used as an asset class is leading to a lot more storage in that space, so we like it. It's not a huge business, it's about $1 billion globally, but it's a business where we think that Iron Mountain's brand and our know-how really plays well. And the last aspect is that we haven't ignored the continued growth in our most developed markets and mature markets, which have internal storage revenue growth in the, say the 2% range. But a lot of that growth is coming not just from our enterprise customers and bundling new services around them to give them more ways of actually both storing and servicing those storage needs, such as air gap that we've launched or are launching with EMC, which we publicized or announced a few months ago. But also things like the small to medium business market, where a lot of what we do for the large enterprise is not as well understood, and quite frankly, the addressable market is even bigger than the enterprise market. So we think there's a big opportunity in that, as well as the federal government.
And can you tell us a little bit about Iron Mountain's approach to sustainable and renewable energy?
Yeah, sustainability is a big story for Iron Mountain. We're really proud of it. In fact, we just announced that we are in the top 25 of the Fortune 1000 in terms of absolute purchases of green power. So that's, for a company, we're in the S&P 500, but we're not the 25th largest company globally. So we feel really good that we've really embraced and are punching above our weight in terms of how much green power we're actually consuming. And where you can look at specific areas is, for instance, that we have 100% of our data center capacity supplied by wind. And we did a major deal, 2 major deals in the last 12 months. to actually secure that. And that's not only the right thing to do for the planet, it also gives us both stable energy prices over the next 15 years because we've bought that forward, and it also gives us lower energy prices by being out front with that. So there's benefits for our shareholders and benefits for our planets, and quite frankly, it resonates with a lot of our customers who are demanding more and more green power alternatives.
Bill, thank you so much for joining us.
Okay, thank you.
For more from REIT Week 2017, be sure to visit REIT.com.